security.
The effectiveness of the Central Bank of Nigeria's strategic measures in stabilizing its foreign exchange position amidst mounting external and internal challenges and a fresh Eurobond auction has begun to have an impact on the nation's foreign reserves. Nigeria's foreign reserves have recorded an increase of $591.7 million in the month following the government's 2.2 billion Eurobond auction on December 2nd of 2024. Earlier on our Business Nigeria show, I spoke to James Oladisa, who is an industry sector analyst with Chapel Hill Durham. He commends this positive development, but also wants relevant authorities to sustain this move aimed at stabilizing the naira.
We've seen a concerted effort between both the monetary and fiscal authorities to, strengthen the naira. And as you mentioned, the fiscal authorities conducted an Eurobond auction to raise about 2.2 billion. And that has also, in a significant way improved the FX reserves of the country. And it just means that the central bank now has much more leeway to be able to meet our import needs as well as settle our external obligations. And these are positive for the country. And, it also means that the central bank is able to intervene in the market as needed. We've seen much more transparency with the adoption of the EFEM's structure in the FX market, and with the fact that we're seeing external reserves improve, this is sort of like a tailwind for the strengthening of the naira.
Well, the stock market resumed its bullish run, splashing more gains on investments. Now, the market index hit 1.25% in late hour trade, stressing the gaining streak that have been on the floor since the start of the new year. It was MTN Nigeria that cornered the biggest deal, calculating at 10%. Now, this happened as the telecom firms are pushing for increase in tariffs. Other trade gainers in the market were Zenith Bank, Access Holdings, UBA and O&O. Trade decline has included FCMB, Wapco Lafarge, First Bank Holdings, Sterling Bank and United Capital. Outside our shores, global bonds eased today and the dollar held steady near its highest levels in more than a year, although stocks continue to fall with most Asian indexes down. Japan's Nikkei dropped 1.2% with additional headwinds of a rebounding yen, which added about 0.2% to 158.08 per dollar, following its slide to a nearly 6-month trough of 158.5 per dollar on Wednesday. Australian stocks benchmark slipped 0.5, while Taiwanese shares lost 1.1%. Hong Kong Hang Seng and mainland index Chinese blue chips were both little changed. US S&P 500 futures pointed 0.2% lower after the cash index eked out 0.2% gain overnight. Pan-European stock 50 futures were slightly lower, though UK FTSE futures added 0.2%. Well, the Japanese government has urged Pakistan to resolve import restrictions on automobile manufacturers and ensure the safety of personnel working on official development assistance projects. These were the focus of discussions during the 8th Japan-Pakistan high-level economic dialogue, which held in Tokyo. The dialogue emphasized the importance of Pakistan's consistently implementing the International Monetary Fund program. However, they called on Pakistan to streamline tax and custom exemptions procedures through the Ministry of Economic Affairs to address insufficient understanding of bilateral commitments regarding these exemptions. Well, crude oil prices were little changed today, with investors weighing firm winter fuel demands, expectations against large build of fuel inventories in the U.S., the world's biggest oil user, and macroeconomic concerns. U.S. West Texas Intermediate crude rose to sell for $73.36 per barrel, with an upward price margin of 0.46%. Brent experienced an upsurge of 0.12% to sell for $76.25. Bonnie Light sells for $78.62 per barrel, with a downward price review of 2.84%. And for the OPEC basket, dealers offer $76.07 per barrel, with a decline of 0.14%. Well, that's business. Next is sports. After this break, stay with us.